Wall Street skyline, factory floors slowing down, headlines, GDP shows job growth misses expectations, regions coming. The signs are flashing red again. A wave of new economic data is raising fresh concerns that the US could be headed for a recession by the end of 2025. GDP growth is slowing, jobs creation is stalling, and both Wall Street and Washington are watching nervously. Starts slowing GDP decline, news clips of financial analysts reacting to reports. According to the latest Commerce Department report, US GDP grew just 0.7% in Q2, a sharp drop from earlier in this year and well below projection. That's the weakest quarterly growth since the COVID era. Recovery began to stabilize in 2022. Meanwhile, the June jobs report showed only 78,000 new jobs added, missing estimate by nearly half. Worse, unemployment ticked up to 4.2%, the highest level in over 2 years. Empty storefronts, now hiring, signs coming down, factory slowdown footage. From retail to manufacturing, hiring is slowing. Business investment is cooling, and consumers, once the engine of the post-pandemic rebound, are starting to pull back. The combination of higher interest rates, persistent inflation, and global uncertainty is weighing heavily. Jerome Powell at press conference, headlines rate cuts coming. The Federal Reserve has taken notice. After more than a year of aggressive rate hikes to tame inflation, Fed Chair Jerome Powell is now signaling a possible rate cut as early as this fall, a move aimed at stimulating demand and preventing a deeper slowdown. But some economists warn that the Fed may have acted too late. Grocery prices, gas pumps, people struggling with bills. Strong inflation has cooled from its 2023 peak. Prices are still elevated, especially for essentials like food, housing, and energy. Many Americans feel squeezed. Credit card debt is at record highs, and personal saving rates have plunged. A recent Gallup poll found that 62% of Americans believe the economy is already in a recession, even if the data does not quite confirm it yet. Political leaders speaking, campaign trail footage. With the 2025 presidential election looming, the economic outlook is becoming a central political issue. President Biden is pointing to long-term progress and infrastructure spending as evidence of strength, but critics say working families are not seeing the benefits. Republicans are blaming the White House for overspending and regulatory burdens that the ergo have stalled growth. Market floor, investor reaction shows major tech companies. On Wall Street, volatility is rising. The S&P 500 dipped 3% last week. Tech stocks, once resilient, are showing signs of weakness. And bond markets are sending warning signals with a deeply inverted yield curve, often seen as a precursor to resilience. Still, not everyone agrees a downturn is granted. Economists on CNBC stopped landing text graphic historical economic charts. Some analysts say the US could achieve a soft landing, a rare outcome where inflation drops without triggering a full-blown recession. But others warn that if job losses accelerated and consumer confidence drops further, the economy could contract by late 2025. Americans workers, small business, family at dinner table budgeting. For millions of Americans, the debate is not academic, it's personal. Will prices stabilize? Will layoffs spread? And will the economy recover before it tips into something worse? The answers may not come for months, but the anxiety is already here. Resilience or resilience, the US economy stands at a crossroads.